David Malpass is with us. He is the Trump campaign senior economic advisor and Encima global founder and president. David, good to see you.
Morning,
what do you attribute this sharp sell-off in markets this morning?
So there's going to be change, and so markets don't like uncertainty, so that was the initial reaction. Plus, it was a surprise. It just wasn't priced into the markets. But as the markets look at what the Trump plan is, it's for more growth, and that's going to help all of the companies in the index eventually. You know, if they've been taking a lot of aid from governments, they're not going to be the beneficiaries, because part of this movement is to get government out of the special interest business. So some companies won't do well in this environment, but most everybody in the country, the point of the movement is to get people in the country better off.
But there is more to it, right? I mean, you got the Mexican peso this morning at a record low. Obviously, people are worried about what the trade deals mean for our friends around the world. So is it also some worry and uncertainty about what he may do with trade?
You know, a lot of that is what people say he's going to do, but when he actually came out and gave his acceptance speech, it was gracious, it was graceful, it showed strong leadership. He reached out to foreign countries. He said, we want you to know that we're going to deal fairly. He reached out to the Republican Party by bringing Reince Priebus on, and so in that way, it's a bringing together, and he said that straight out.
David, what do you think this means for interest rates? So my interpretation of the initial market reaction is initially bond yields were down quite substantially. I think people thinking that an interest rate hike by the Fed next month is probably off the table now, given the uncertainty that some people have, the concerns about that. Then I think they've come back a little bit, and I think one of the things that's perhaps weighing on people, some of the commentary in some of the markets this morning is, you know, he's been very critical of the Federal Reserve. He's been very critical of Janet Yellen, said he wouldn't replace her. There's probably some concern is there about the independence of the Federal Reserve and the central bank, and what that might mean in the long term for inflation and for interest rates. Where do you think President Trump's going to take the country on that?
I think he's going to take it toward growth. And so if you think about what interest rates will do over time in a growth environment, they will gradually normalize. They'll be somewhat higher. So the market's trying to do these instant reactions. But the real issue is going to be, can you deliver more growth? And that's going to be good in the end for financial markets in general. You know, we've had the problem now of bond markets, a lot of the bond markets not having liquidity, because people are just uncertain about how this can possibly work. You can't have the U.S. growing 2%. So Mr. Trump came out, President-elect Trump came out last night and said growth is going to double. And so that is a pretty loud signal to all of the financial markets that things are going to get better.
One thing we know is that you cannot grow your way out of the entitlement tsunami that is coming down the road. About 12 years that Medicare runs out of money. One thing that Donald Trump and Hillary Clinton, neither one of them talked about on the campaign trail. He's talking about doubling Hillary Clinton's infrastructure plan. One concern is looking at longer-term interest rates, whether they start going up, and we are swamped because we're now facing $20 trillion in the national debt.
But another theme that he's said, and very strongly, is that government is going to be run more like a business. It's going to be more effective. So a lot of the infrastructure that we can foresee for the U.S., and he talked about it being the best infrastructure, is going to come from the private sector. One of the problems that we've had in this current environment is just a lack of business investment in anything, in equipment and in infrastructure. So if you create a hallmark of his plan is to cut the corporate tax rate to 15% and business tax rates in general. That's going to cause a tremendous amount of infrastructure. So I don't think that we should at this point be talking about the problems, but actually the change. The change is the emphasis, and it's toward more growth. That's clear.
The annual interest on our national debt in the next 4 years during the Trump presidency, it's going to actually top defense spending every year. So that's again, the debt is a huge problem. Just the interest on the national debt will be more than our defense.
Big opportunity right now to lengthen the effective maturity of the U.S. national debt and make the dollar trustworthy. Problems that we've had in recent years is the government, the net maturity of the debt was being shortened by the central bank buying in a lot of the long maturity debt. So one of the goals to help the financial stability of the country is to lengthen the effective maturity of the debt, and that's going to make everybody safer. Taxpayers right now are on the hook for the interest rate increases that you're talking about, and I think there are ways to manage that better.
This is partly, I would not be fooled by this huge sell-off that we're seeing, because I feel like when you actually look at the plan, if he's able to lower corporate taxes to 15%, if he's able to roll back regulations,
he's got Congress,
replace, and he's got and replace Obamacare, you have to believe that's going to be a huge boom for corporations for their earnings. That's going to send the stock market higher.
A key part of valuation is after-tax corporate earnings. Those are going to be higher as you go down the line. And if you stayed with the old program, that was a 2% program with much higher tax rates, that really wasn't going to work. So I think the market will look at it, get used to it, and like it once as it's implemented.
So you think we'll see tax reform in 2017 then?
Yes, and that's important because small businesses, you know, Mr. Trump started off right off last night talking about inner cities. How do you make inner cities better? That's small business growth. You've got to get them going, and that means tax reform. They can't do it with the current regulatory and tax environment.
David, good to see you. Thank
Thanks.
you so much. David Malpass with the latest there, and congratulations on your team winning.